When Donald Trump speaks, markets listen. His words can send shockwaves through the financial world, and his opinions often set the tone for investors everywhere. Nowhere is this more apparent than in the fast-moving world of crypto, where a single statement can spark rallies or trigger sell-offs overnight. Trump's influence is reshaping the digital currency landscape, blurring the boundaries between Washington's power and the decentralized promise of crypto. For anyone involved in digital assets, understanding this evolving connection is more important than ever before. Enter Pi Network, a cryptocurrency designed for everyone. It's mineable on smartphones, making it accessible to millions who might never have owned crypto before. For these users, known as pioneers, news about crypto regulation, adoption, or government policy can be game-changing, affecting their confidence and future plans. On February 20, 2026, the entire crypto community is buzzing with speculation and debate. A Supreme Court ruling against Trump's trade tariffs has sent ripples through both traditional and digital markets. Meanwhile, his family's growing ventures into crypto have only added to the uncertainty, shaking investor confidence and sparking new questions. For Pi holders, the big question is, what does all this mean for us, and how should we respond? In this chapter, we'll break down Trump's increasing involvement in crypto, his family's business dealings, and how these moves could shape the future of U.S. regulation, potentially impacting the entire crypto ecosystem. Most importantly, we'll connect these unfolding events back to Pi Network and its global community. What are the potential impacts, good or bad, for its hopeful community? Could this be a turning point, or just another bump in the road? As crypto evolves at breakneck speed, Pi's future is tied to these high-level developments. Let's dive in and explore what lies ahead. The Trump family has made a bold entrance into the world of cryptocurrency, shaking up the financial landscape in ways few could have predicted. Their firm, World Liberty Financial, recently launched USD1, a stablecoin pegged directly to the US dollar, aiming to bridge the gap between traditional finance and the fast-evolving crypto market. Unlike the wild swings seen in many cryptocurrencies, USD1 offers a level of stability that's rare in the digital asset space, drawing in investors who crave security alongside innovation. By January 2026, USD1 circulation had already surpassed $5 billion, a staggering achievement for such a new entrant. Eric Trump marked this milestone with a high-profile celebration, underscoring both the strong demand for USD1 and the enduring influence of the Trump brand in digital finance. Today, USD1 stands shoulder to shoulder with major stablecoins like USDT and USDC, not just as a political statement, but as a legitimate, fast-growing financial product with real-world impact. This isn't just a side project for the Trumps, it's a major player in the global digital currency market, with teams working around the clock to expand its reach. The Trump family's rapid success is built on a series of strategic decisions, powerful alliances, and a keen understanding of both finance and branding. Their deep financial ties to the crypto sector are unprecedented for a political family, setting new standards for political involvement in digital assets. Investors, regulators, and the public are all watching closely, aware that every move could reshape the future of finance. USD1's rapid rise is now central to Trump's broader crypto narrative, influencing both market trends and public perception. It's a tangible example of how business interests can drive policy, blurring the lines between private enterprise and public decision-making. Trump's involvement in crypto is about more than politics. It's about real financial stakes, innovation, and a vision for America's digital future. This context is crucial for understanding his public comments, his policy proposals, and the potential direction of U.S. crypto regulation. The Trump name now carries significant weight in the digital economy, influencing both markets and public opinion. The implications for the industry are enormous, and the world is watching to see what comes next. USD1's explosive growth owes much to a strategic partnership with Binance, the world's largest crypto exchange. This alliance gave USD1 instant visibility and access to millions of users. The partnership followed Trump's 2025 pardon of Binance founder Changpeng Zhao, intertwining politics and business. Binance actively promoted USD1, running campaigns that fueled its rapid adoption. By early 2026, 85% of USD1, over $425 billion, was held on Binance, making it the stablecoin's primary marketplace. However, these accounts are only available to users outside the US, highlighting a global strategy. This move helps navigate strict U.S. regulations while leveraging international reach. The Trump-Binance partnership is a case study in how political influence and business interests can reshape the crypto landscape. It's a global play, not just a domestic one. The result, USD1 is now a major force on the world stage. The implications for other projects are significant. Rumors move markets, but facts matter more. In the world of finance, speculation can spread like wildfire, influencing prices and investor sentiment in an instant. Recently, speculation swirled that Trump would order the U.S. Treasury to buy Bitcoin if prices fell below $60,000. The rumor quickly gained traction online, fueling debates and wild predictions across social media and trading forums. The idea of a government-backed Bitcoin safety net excited many, but it was pure rumor. Some saw it as a sign of mainstream acceptance, while others worried about government intervention in crypto markets. In February 2026, Treasury Secretary Scott Bessent debunked it. The U.S. has no plans to buy Bitcoin or any crypto. His clear statement cut through the noise, reminding everyone that official policy is what truly matters. Such a move would require an act of Congress, not just a presidential order. The checks and balances of government ensure that major financial decisions are not made on a whim. This reality check separates hype from policy. It's a crucial distinction for anyone navigating the volatile world of crypto investments. The lesson: investment decisions should be based on confirmed facts, not wishful thinking. Acting on rumors can lead to costly mistakes and missed opportunities. The Treasury's statement removed a major speculative factor from the market. Investors recalibrated their strategies, focusing on fundamentals rather than hearsay. It's a reminder that government action in crypto is complex and slow. Policy changes require careful deliberation, public debate, and legal processes. Official statements carry more weight than online rumors. When it comes to government and finance, clarity and transparency are essential. For investors, clarity is key. Don't get swept up by the noise. Staying focused on reliable information helps cut through the chaos of the market. The fundamentals of government and finance still apply, even in crypto. Understanding the rules of the game is just as important as tracking price movements. The episode underscores the importance of reliable information. In a fast-moving market, facts are your best defense against costly errors. As the landscape shifts, facts, not fantasies, will shape the future. Stay grounded, stay informed, and let evidence guide your decisions. Crypto's volatility was on full display after the Supreme Court ruled against Trump's tariffs. Bitcoin spiked 2% to over $68,000, then quickly dropped below $67,000. This sell-the-news pattern reflects a market on edge, with traders locking in quick profits. Underlying this is economic anxiety. U.S. GDP growth is sluggish, inflation is up, and stagflation fears loom. The Federal Reserve remains cautious, making rate cuts unlikely. Bad news for crypto bulls. Bitcoin's start to 2026 is its worst 50-day performance on record, despite network growth. Other coins like XRP are stuck in narrow ranges, showing trader hesitation. The market is waiting for a clear signal amid political headlines and economic headwinds. For now, uncertainty rules. Investors are cautious, watching for the next big move. The crypto world is caught between hope and hesitation. Every headline matters. The stakes have never been higher. Amid high-stakes trading, Pi Network offers a different vision: crypto for everyone. Unlike Bitcoin, Pi can be mined on smartphones. No expensive hardware needed. Users simply tap the app daily to earn coins, making it accessible and energy efficient. This simplicity has attracted tens of millions worldwide, all hoping their Pi coins will gain real value. But there's a catch. As of February 2026, Pi is still in an enclosed mainnet phase. Coins can't be traded on exchanges. Their value is theoretical. The community eagerly awaits the open mainnet launch, when Pi could finally be traded and priced. This long wait makes pioneers sensitive to any news that could affect crypto's future. For now, Pi is a project built on hope and community. Its fate hinges on broader industry developments. The next chapter could change everything. Trump's crypto ventures could impact Pi Network in key ways. His high-profile involvement brings mainstream attention, helping legitimize the industry. A more crypto-friendly political climate could ease Pi's path to open mainnet and exchange listings. But there are risks. Increased scrutiny or backlash could mean stricter regulations, delaying Pi's launch. The rise of big, well-funded projects like USD1 could overshadow grassroots efforts like Pi. The crypto world may become more centralized, challenging Pi's community-driven model. Pi's future depends on how these political and business forces play out. The stakes for pioneers are real. Crypto's future in the US hinges on lawmakers and regulators. Political battles like the Supreme Court's tariff ruling distract from passing clear crypto laws. Key bills, such as the Digital Asset Market Clarity Act, could be delayed. The 2026 midterms are critical. A Democratic win may mean stricter rules. A Trump-aligned Congress could push for pro-growth regulations. But politics could also favor connected players, not the broader ecosystem. For Pi Network, regulatory uncertainty is a major hurdle. Its transition to an open, tradable currency depends on clear legal frameworks. The Pi core team must navigate this maze carefully. Pioneers should watch Congress and the political climate closely. The next few years will define crypto's and Pi's opportunities. Crypto is now a major force in global finance and politics. Trump's deep involvement through business and policy is reshaping the landscape. For Pi Network's millions of users, this is a moment of both opportunity and risk. Mainstream attention could legitimize Pi and speed its launch if regulations are favorable. But political spotlight could also bring crackdowns or favor big players over community projects. The market's nervousness shows how fragile confidence is. Pi's future is tied to these larger forces: politics, economics, and regulation. The key: stay informed, separate fact from rumor, and watch for real developments. The next chapter for Pi and crypto will be written by these events. For now, the world watches.